Eggs are selling at $8 a dozen. 8 million birds were wiped out in weeks. The Texas poultry industry, once a $3.2 billion powerhouse, is now hemorrhaging jobs, collapsing barns, and bankrupting entire communities. The governor's call for disaster aid came too late for many. Why did the safeguards fail, and who stands to lose everything next? The true scale of this economic freefall is only beginning to emerge. In the heart of Texas, the machinery of the poultry industry began to grind to a halt. At major processing plants, production lines slowed, and in some cases stopped altogether. Companies like Sanderson Farms, now operating as Wayne Sanderson Farms, responded to shrinking bird supplies with quiet but deep shift reductions. Workers who had counted on steady hours found themselves sent home early or told not to come in at all. In towns built around these facilities, the impact spread beyond the factory gates. Cafes and hardware stores lost their early morning crowds. Trucking companies parked rigs that once hauled feed and live birds on tight schedules. Across East and Central Texas, the ripple effect was unmistakable. At Pilgrim's Pride, heightened biosecurity and supply disruptions forced operations to adapt on the fly. While the company refrained from publicizing specific plant shutdowns, local growers and plant workers described a climate of uncertainty. Some facilities staggered their processing shifts. Others ran at reduced capacity, waiting for word on the next flock's fate. Temporary layoffs and hour cuts became a new reality. At Cal-Maine Foods, the country's largest egg producer, a single outbreak meant the loss of nearly 2 million birds at a single complex. Production at that site was suspended for months, with barns standing empty during cleaning and disinfection. Workers who remained were reassigned to maintenance or sanitation, but many saw their paychecks shrink. Cal-Maine's corporate statement emphasized their commitment to safety and supply, but made clear that the scale of depopulation had never been seen before in Texas operations. The result was devastating for local workforces. The economic shockwaves hit hardest in rural counties, where poultry jobs anchor local budgets. County officials in places like Parmer and Gonzales watched as payroll taxes dwindled and sales tax receipts dropped. The Texas Poultry Federation estimated the state's poultry sector supports over 40,000 direct jobs and contributes roughly $5 billion annually. Now, with processing capacity down sharply, thousands of those jobs were at risk. For every worker idled on the line, there was a school, a road crew, or a volunteer fire department missing a piece of its funding. Corporate spokespeople pointed to the unprecedented nature of the crisis. In prepared remarks, they cited biosecurity investments, supply chain disruptions, and the ongoing threat of H5N1 as reasons for the cutbacks. But for the families who depended on these paychecks, the damage was immediate. The sudden loss of income left many searching for work in counties where poultry had been the only game in town. As plants scaled back, the vacuum left behind would soon pull contract growers and local lenders into the storm. In Gonzales County, a family stands in front of 4 empty poultry barns, each built with loans that total more than $1 million. The barns, once filled with the sound of thousands of birds, now sit silent. The growers' monthly payments haven't stopped, but the income has. After a positive H5N1 test, the entire flock was destroyed in less than 2 days. The integrator canceled all future placements. For the last year and a half, not a single bird has returned. Building a modern poultry barn in Texas costs anywhere from $500,000 to over $2 million. Most growers borrow heavily, betting on long-term contracts with major companies. Those contracts promise steady flocks and predictable payments. But when a disease outbreak hits, the promises vanish. The bank still expects its check each month. Utilities and property taxes keep coming due. Insurance, if it is available at all, covers only a fraction of the loss, and premiums have tripled for some operations since the outbreak began. The grower in Gonzales isn't alone. Across Central Texas, the number of poultry farmers filing for bankruptcy has surged by an estimated 60%. With barns sitting idle for 18 to 24 months, families burn through savings and then face impossible choices. Some try to repurpose their buildings, but poultry barns are so specialized that few alternatives pencil out. Others walk away, leaving behind land that has lost nearly half its value in a year. County appraisers report poultry property values down 40 to 50% in the hardest hit areas. Local banks, once eager to finance new barns, are changing course. A lender in Gonzales describes a wave of defaults and missed payments. He says his board now refuses to underwrite new poultry loans anywhere near the outbreak zone. The risk is simply too high. Even long-term customers with spotless records are being turned down. The credit freeze spreads beyond growers, hitting equipment dealers, feed suppliers, and rural communities that depend on poultry money to keep their schools and clinics open. For families who built their lives around these contracts, the collapse is personal. Some describe the stress of watching a business built over decades unravel in a matter of months. Others talk about the stigma of foreclosure in a small town, or the fear that their children will never return to farming. Without urgent policy intervention, the financial wreckage continues to deepen, leaving growers and lenders trapped in a crisis with no clear end. The first positive tests for H5N1 arrived in poultry-dense counties, with Gonzales and its neighbors lighting up state disease maps. Within hours, Texas Animal Health Commission teams notified growers that every bird on a positive farm had to be destroyed, often before the next sunrise. One Texas Animal Health Commission representative describes the process as relentless: confirmation at the lab, a phone call to the farm, and then a race against the clock. The 24-hour depopulation protocol leaves no room for hesitation. Entire flocks, sometimes hundreds of thousands of birds, are eliminated in a single day. Epidemiologists tracking the virus note that wild birds, especially waterfowl riding the Central Flyway, are the likely couriers. Despite investments of $50,000 to $100,000 in new biosecurity at many operations, including shower-in and shower-out protocols, vehicle disinfection, and locked gates, the virus still finds its way inside. For growers, the sense of inevitability is crushing. Once H5N1 enters, there is no treatment, only total eradication. The fallout reaches far beyond the farm. Egg shelves at grocery stores in affected counties empty out, with store managers posting limit signs and apologizing to regular customers. Retail egg prices jump to $6 or even $8 a dozen in some Texas supermarkets. Wholesale prices spike by as much as 300% in a matter of weeks. Chicken breast, a staple for many households, climbs 40% above last year's price. At a local food bank, a volunteer explains that families now line up earlier, hoping to get eggs or chicken before supplies run out. One mother says she has not seen affordable eggs in months. The pain from the outbreak moves swiftly, from wild birds to barns to dinner tables across Texas. Federal relief programs were designed to soften catastrophic losses, but for Texas poultry growers, the safety net often fails to reach the ground. USDA indemnity covers only 75% of the market value for depopulated flocks, leaving growers to absorb the rest of the loss. The gap grows wider when factoring in the cost of cleaning and disinfection, and months of empty barns with no income. Insurance, once a backstop, is now out of reach for many. Premiums have soared, and some insurers refuse to write new policies for poultry operations in Texas at all. For contract growers, this means carrying mortgage payments and debt with no protection if disaster strikes again. Trade restrictions have added another layer of pain. After H5N1 detections, Mexico and over 40 other countries placed bans or limits on U.S. poultry imports. Texas producers lost access to export markets worth $250 million annually, with no quick path to recovery. The result is domestic oversupply in some categories, but not enough to fill the gaps left by depopulated flocks, and a battered reputation for U.S. poultry abroad. USDA officials acknowledge the urgency, but warn that vaccine development is still years away from widespread use. Without a viable vaccine, the only proven tool remains mass culling. Policy advocates argue for 3 immediate changes: faster and fuller indemnity payments, a public and private insurance solution for disease losses, and targeted aid for barn conversions and worker retraining. Experts forecast recurring outbreaks for at least 3 to 5 years unless these gaps are closed. The future of Texas poultry and the stability of rural communities hangs in the balance. Today, Texas poultry barns stand empty, and food prices continue to rise. As H5N1 becomes endemic in wild birds, the threat to farms and to food security remains. The real test now is not how we recover, but whether our safeguards can withstand the next outbreak. The stakes have never been higher.